Well, you guys asked for it, so I'm going to give it to you. Today we will go over the stocks that we bought last week on that
bloodbath that was last Friday.
And there will be a couple picks that nobody is talking about, so you might have a new stock or two to look into as they are at some very juicy prices. Ooh, is that too weird? I don't know. Comment down below if you think that's too weird. I'm not sure if that was weird or not. I don't know. You guys tell me. Sorry. So hopefully you enjoy this today, and if you enjoy hype-free truth on stocks so you can feel confident buying on these huge red days instead of buying at all-time highs, then make sure you're subscribed and hit that like button as well. Okay, so on to the first stock I think everybody loaded the boat on, and that would be Tattooed Chef, or ticker symbol TTCF. It just got clobbered after that big earnings miss, so we knew it was going to drop like a rock, despite the fact that in our discussions about the earnings call itself, it really wasn't all that bad. We actually liked the earnings call. I mean, there was a one-time charge in there, and again, we knew they made some large acquisitions last quarter as well that would make it look kind of bad on the short term, but pay off huge in the long run. So on Friday, the group lit up with buys all over the $17 range, and I added more in that range too. Actually, I added 2 different times as it just kept falling, and I had a massive order in for under $17, but we just didn't quite get there. Now that order wasn't as big as my order was when it dropped down to the $15 range a few months ago, but it was a big order nonetheless. For those that missed that huge opportunity to buy at $15 in April, Tattooed Chef gave you another opportunity to buy in at a great discount. Now since I do not put ads in my video and I have no sponsors, let me quickly mention that you could have seen all of these buys discussed in this video today if you were a member of the Market Insiders private group. Those members also get access to 3 free courses, my watch list with price targets, and a ton more that we'll discuss at the end. There are just a few more discount spots available, so make sure you get your spot and you get that price for as long as you keep your membership, even if hyperinflation actually happens and the price goes up to like $1,000 because even a cheeseburger is $1,000. That'll basically make the price the same as a packet of ketchup. And that might be my worst analogy ever, and that's actually saying something on this channel. Moving on. So on to stock number 2, and that would be Lemonade, or ticker symbol LMND. This is a stock that everyone was hot on this time last year, and I actually love the company, but I just did not like the valuation at all. And like all the latest and greatest disruptive stocks that got too overheated last year and at the beginning of this year, it has fallen dramatically from its highs at just under $190. It was overpriced last year at $70, but a year later, that price looks much more tempting to me. I have not pulled the trigger yet as I still need to sell it on a valuation, but many in our group already have pulled the trigger and it's finally getting back to a more reasonable valuation and is worth a legitimate look for sure. So stock number 3 would be Nano Dimensions, or ticker symbol NNNDM. And I know I'm pronouncing it wrong, guys. I'm sorry, I just can't say the words right. Ah yes, this is another retail favorite and former Cathie Wood favorite that continued to run up, and then they would stop the run by raising capital before the stock would run up again, and it was kind of rinse and repeat, which happened like 8 or 10 times or something like that, but it has been in a steady decline since February. It finally hit my price target, and I added shares in the $5 range, and I will just let it ride from here. Because of the share dilution due to those capital raises, management needs to put more of that capital to work to really see any significant movement in the stock price, in my opinion. But they are in a position to do just that. It's just taking longer than any of us really want. But when a stock gets beaten down to a certain point, in my opinion, you have to add and just be patient. And 3D printing has been really beaten down, which leads us to our next stock, and that would be Desktop Metals, or ticker symbol DM. Here's a stock the group has been buying for months now, and it creates a lot of discussion around it, which is amazing considering most people do not even know about the stock. That is the beauty of a community. You are exposed to all different types of stocks you could not have possibly found on your own. So DM is another 3D printing company that has been doing great things, but has been beaten down harshly like the rest of the industry. Even after announcing DM acquired another name many of you have heard of, that being X1, it could not save the stock from an overall downward trend. My favorite time to buy stocks is when they are doing great things, but the market, the sector, the industry is not in favor with investors overall. Now it does require patience, don't get me wrong, and a little bit of stomach medicine too, but DM is making huge moves and it's dirt cheap right now in my opinion, so it's a stock I had to add to my portfolio and I will continue to add more. And on to the final stock we will discuss here today, and that would be SOFI. Ah yes, SOFI, the controversial stock that people seem to have a very strong opinion on, either good or bad. Just when it seems to be headed in the right direction, it just cannot keep the momentum going. This stock was rolling, but has consistently missed expectations, has a bit of a cloud hanging over its head with Chamath and all his investments specifically and all the drama around all that. And with the lockout period expiring soon, the money is going elsewhere for now. They are disruptive for sure, but the question remains, will the disruption actually translate to the bottom line? Sure, it may be great for you and I, but Wall Street could care less, so the stock will suffer until the disruption shows more on that bottom line. On the positive side, it is growing faster than they expected, and they are focusing on growing the business, not profitability, which I love with any of my high growth plays. Yes, profitability will eventually matter, but as a young company, I'm willing to trade time and stock price growth for growth in the underlying business. I actually own the stock, and I love the stock, and I'm actually looking to add the stock when it gets to a little bit better of a valuation. We're almost there, but we're not quite there yet, but I'm hoping we get to that level soon.
I have my eyes on you, SOFI.
And if you don't have a defined plan for all your stocks, or you don't know how to create a plan or value a stock, we can help you with your planning, as there is a course in the Market Insiders Credit Group dedicated to that, along with creating an infinite money loop, and other courses available as well, along with live weekly Q&As where you can ask me virtually anything, a super great Discord group that's just awesome, tons of exclusive videos, downloads, and more, all for the price of a meal for two at McDonald's. Consider it a cheap date that went really well. So check that out. It's the first link in the description and the pinned comment. So thanks for watching, and we'll see you in the next one.